I'm Bill Borden, and I'm the Corporate Vice President of Worldwide Financial Services here at Microsoft. I'm excited to have you join me for the second episode of my new series, The Borden Line. As those of you in financial services are well aware, the industry is evolving quickly with expanding customer demand, disruptive competition, and new technology-fueled innovation. Financial institutions' ability to adopt the right digital strategies is becoming more critical than ever. That's why I want to use this series to open a line of conversation with thought leaders and innovators to discuss the industry, the insights, hot topics, and solutions. This week is Climate Week here in New York City, and a timely opportunity to talk about climate action and what's needed for businesses to better navigate the growing impacts of climate change. I'm thrilled and excited to have my guest today, Rowan Douglas, CEO of Climate Risk and Resilience at Howden, one of the largest insurance groups in the world. As his title suggests, Rowan is an expert in the field of climate-related risk with more than 30 years of experience in the insurance and reinsurance industries. Hey, so let's get started. Rowan, huge welcome to the show.
Bill, it's great to be traveling down the Borden Line with you. Really fantastic. And there's lots of interesting subway lines here in New York, which I'm learning all about. But the Borden Line sounds the most exciting of them all. So great to be with you.
Well, I'm excited that you navigated the subway to be able to join me this morning, because this week is Climate Week here in New York City. So great time to actually be with you. To discuss these opportunities, to work together, and to actually bring a different thought process and view around the ecosystem of institutions, organizations that are focused on climate. So I think this is your 11th year, Rowan? Did I hear you say that this week?
It's my 11th year here in New York for what's become Climate Week. It's always a big week. You've got the UN General Assembly, and of course, with all those governments and policymakers, with climate being so important over the last decade, it's always been a big week in the sort of climate calendar. But in the last 5 or 6 years, it's also become a big area of the private sector and the financial sector. And it gets bigger and bigger. Do you know there have been 900 climate-related events here in New York this week, including the one we were lucky enough to have with you, which is obviously one of the very best and biggest on Monday. But no, it's great to be here, but also to feel the mainstreaming of this issue within the worlds of finance and technology. And obviously, those two areas are the two pillars through which so much of the climate challenge is going to have to be addressed. So it's great to be here this week.
Yeah, and with the 10 years previously being involved in Climate Week leading up to this week, I'm curious to get your thoughts on this year's theme, right? The theme this year is it's time. Time for action, time to lead, time to accelerate changes. So I'd love to get your thoughts on, building up from years past to the theme of it's time now and what that means to you.
Yeah. Well, many of the viewers and listeners today will maybe remember the Paris Climate Summit, which was in 2015. And that was probably the first moment that in the wider domain, the climate agenda really became mainstream. And obviously there were some big commitments. Well, a big general recognition that obviously the climate was changing and significantly influenced by human activity, and as well as human activity, the growth of economies, the growth of populations, ultimately making us also more vulnerable to these changes. So there was a recognition that these were structural issues that needed to be addressed. They would be challenging to address. And the reality is that the years go by and positive changes are happening. Of course they are. There's been lots of great innovation, lots of great investment. But, we've just witnessed yet another month, I think, of the world's highest temperatures. We can almost wherever we are in the world feel and see, certainly on our TV screens, the increase in extreme events and pressures on human systems and communities, as well as economies. So the reality is that it's almost 10 years, a whole decade since Paris, and we've barely begun to bend the curve, both on changing our emissions and the changes we need to make to our energy systems, but also, of course, critically to our resilience and adaptation to the inevitable changes that will happen over the coming years and decades. So I think there's a recognition that it's time, because actually if we don't bend the curve really fast, this is going to be a very, very difficult few decades and century ahead. So I think those of us who have been in the space for a while know that actually we don't have a luxury now of another 10 years of sort of getting the wheels beginning to turn. We've got to turn a lot faster. But also, I think many people coming to this area relatively afresh can witness and see the changes and can sense that actually, if we're not careful, this whole challenge is going to get ahead of us. So definitely that's a collective feeling. But also, of course, a recognition that these changes are not easy. This is difficult stuff, and it's going to mean difficult choices for us as individuals, for companies, but also for entire economies and countries. And that's the challenge that we have to face, isn't it?
Yeah, it is. And it's been interesting to hear about the analysis of risk associated with supporting the investments that's going to be needed to support these new ideas, Rowan, right, that are going to need to bend the curve, right? We're going to need new ideas to bend the curve. We're going to need ways to bring investment capital to those ideas. That investment capital is going to have to determine the risks of those investments, all right, to make them. And it's put kind of insurance at the forefront in this week's conversation. So talk to me about what that means and what insurance means to the overall support of the idea generation investment that's going to be needed to bend the curve.
Yeah. No, it's funny, actually. At a panel yesterday, I was asked by a moderator, because obviously there's the beginnings of challenges of insurability, not least here in the United States. And this moderator said to me, so, insurance irrelevant? Is it becoming irrelevant? And I said, well, it's actually now becoming relevant because people are talking about it. And, people are only talking about it when they fear they may not be able to actually, obtain it. And it's like so many things in life, isn't it? We take it for granted until suddenly things are maybe not available. And then the implications of that become clear. And obviously, a concern is if one can't get insurance, one may not also be able to protect assets, even raise credit, raise investment. That can really sort of get more than grit in the wheels of commerce and people's futures. So, and there is a real challenge. I think obviously the challenge of changing our energy systems is massive, but there's also the challenge of just ensuring that our communities, our cities, our agricultural systems are resilient for the future. And the challenge at the moment, Bill, is that, and it seems surprising, but these risks, these physical risks of extreme weather and a changing climate are currently not being integrated into the calculus, if you like, the decision-making processes of investors and creditors in the built environment, in the economy. So, and that means that there's a risk that as we go forward, we continue to sort of build and in places which may not be entirely appropriate, or we may not build in the right way, which is okay in the short term, perhaps, if you're lucky, but ultimately in the long term, those assets could become stranded or distressed when people worry, well, in 20 years' time, will I be able to sell that asset? And that will depend on whether the person in 20 years' time thinks it will be sellable in another 20 years' time. And people are realizing that while people sort of think, well, this is a long-term issue, actually, markets work on confidence of the future. And if suddenly an area of the US or a particular geography in Europe, people feel, well, will it be a viable place in 20 years' time? They may decide actually they're not going to go and buy a house over there. So these things are important, and it's important to encode this risk so we can ensure that we build for the future. So the work we were sort of undertaking was to take a great methodology which is sought to enable real asset investors to make these changes, to get it into the gearbox of business. And that's what we've been able to do with you. And I know we'll talk about that in a second. But there is a wonderful analogy to this, because if we'd been having this podcast in the 1850s and 60s, right here in New York, we'd have probably been using the first telegraph. It'd be quite slow, wouldn't it? We would have done it.
Right.
But people would have equally been moaning that they couldn't get insurance and probably saying, is it still relevant? Because America, like the West generally, but particularly the US, was massively urbanizing. The steam boiler had just been invented. It was an industrial revolution. US cities were growing at such a pace. It was massive investment capital, big public sector investment. But if you look at the history, it's worth a Google. New York, where we're sitting here today, Boston, Chicago, they all burnt. Massive fires. And these happened every decade or so. And people said, well, it's just how life is. We've had fires for millennia, and it's just getting worse. But at the same time, investors were losing so much money, but the insurers were saying, well, this is no longer insurable. And we had this sort of crisis. And ultimately, there was sort of a coming together of the reality that the insurers said, well, you can have your insurance, but we need to de-risk the whole system. We need to have building codes which effectively make buildings and cities less flammable. We need to have zoning laws which keep some of the risky activities maybe away from the residential areas. We need to have a fire department funded appropriately and every mile or two, so that I walk around New York and you've got these beautiful sort of fire truck sheds, and you think, well, that was because of that. And the boring rules of insurance then guided, because you couldn't get investment and credit without the insurance. So investors began to have to build buildings in the right way, in the right places. And it changed urban morphology so that by the 1920s, US cities were no longer burning. And that's kind of the lesson we've got to learn with climate. We've got to use insurance as a sort of a valve, a risk management valve to de-risk our future, to manage the sort of immediate adaptation requirements, as well as, of course, dealing with a broader sort of emissions challenge. So that's kind of the way that technology and good science and good insurance is, as part of the financial system more generally, is going to retrain the invisible hand and protect lives and livelihoods and assets and cash flows. So it's basically Back to the Future.
Yeah, no, thanks for sharing the story and the Back to Future analogy. I love that. I mean, it really puts in perspective, and there's so many parallels to burning cities versus kind of the burning and the catastrophe situations that we have going on around the world today. So a lot of parallels, and that brings it home. And the numbers are staggering, Rowan. I know you and worked with Boston Consulting Group to do a report on this, and the dollars associated with investing in changes needed for resiliency are massive, and then the estimates around insurance needed to support that, on the one hand, are going to be massive as well. I've heard, I think, $10 trillion. I'll let you comment on that. But then on top of that, as an insurance industry, right, if you're not also addressing today's costs of insuring now, you've kind of got this two weights against how insurance is actually going to help solve the problem. So talk a little bit more about that.
Yeah, well, insurance is going to become more and more of a sort of a strategic theme, I think, for companies. And just to give you, a little bit of a flavor, two drivers are going to drive insurance demand around the theme of climate. The first is, we all know we've got a massive investment program here in America, typified by the Inflation Reduction Act, but it's not just that. It's much more than that. Just committed investment around the world, and I think broadly speaking, half of it is here in the US. $20 trillion by the end of this decade is what's already committed. We actually need more, but committed to the low carbon transition. Mm-hmm. Just to give a frame of reference, I think the UK economy is probably $4 trillion a year. I think probably, so, we're talking 4 or 5 UK economies of investment. It's a massive amount. And of that 20 trillion of investment, we think about 10 trillion of that will need to be insured. All right, so that's new insurance demand, because unfortunately around the world, we're not going to have an equivalent reduction in traditional fossil fuel type investment. That we're ramping up low carbon before obviously the fossil fuel is able to be decommissioned. So, and where's that going to come from? That new insurance capacity? We've got to be ahead of the curve. We've got to be building that capacity. And to the other point, we've got to make sure that new infrastructure investment, because it's mainly infrastructure, is built in the right way, in the right places, and is resilient. It's no good building too many vulnerable solar farms in hail risk ridden Texas. We've got to make sure those solar farms, if they're going to be in Texas, are resilient enough to cope with the risks they face. So there's that demand for insurance, coupled with, we expect between now and the end of the decade, about a 50% increase in premium amounts for natural catastrophe, physical climate risk, resilient as well. So when you add these things up, there's going to be this sort of structural demand for insurance. And people say, oh, well, if we can't get insurance, is that really a problem? Well, it is, because insurance, people don't really buy insurance always because they really want to. They buy it because creditors or investors in their assets, require that to protect their own exposures. So that's what we're facing.
Yeah, and look, it's a massive challenge, but we all need to unlock these ideas around how we're going to get there, right? Microsoft as an institution itself has made some commitments to climate impact and sustainability goals, and we're going to need new ideas to get there, right? We've pledged to be carbon negative by 2030, water positive by 2030, having zero waste across our operations that create waste, and to also do that while protecting more land than we use. So very, very big goals and objectives, as many institutions have made around the world. And in order to get there, we're going to need new ideas, we're going to need investment, we're going to need new technologies and new ways to actually deploy them at pace and scale. And so you talked a little bit about the challenges. I think you mentioned the idea of bringing impact on physical asset risk into the equations. But let's talk more about other things that are needed, right, to actually solve the problem, like standardization and others. And I know you've talked about kind of what we need to bring together and the ecosystem we need to bring together to actually, engage and solve and learn and prototype and move forward. So talk a little bit about that.
Yeah. Well, you're absolutely right. So, some of the new ideas and things we'll need to achieve. So on the challenge of integrating physical climate risk within the financial system, broadly, not just insurance, but banking, investment, public finance as well. The insurance sector has made some really big strides since actually Hurricane Andrew here in the early 90s. That was sort of like the ultimate shock event when, insurers and reinsurers, well, they lost more than money. Many of them went bust. Yeah. Much of the US risk was actually reinsured in Lloyd's of London, where I'm from, and it was sort of carnage, really. And it wasn't just Hurricane Andrew. There'd been a spate of losses, and essentially, the insurance sector, driven by its investors and its regulators and its credit rating agencies, got sort of wise to risk and basically said, let's assess what could happen now, not what has happened in the past. And we sort of had to blend sort of human and physical geography with engineering metrics, return periods, exceedance probability curves, annual average losses, but also actuarial science, which allowed us to take sort of relatively limited amounts of sort of data, but also then expand that through statistical processes to be able to simulate not just sort of 50 years, but sort of even thousands of years of potential events to really come up with what the extremes could be. And the industry developed some really powerful metrics to help transmit risk, which then went into our own gearbox of regulation and capital management, even accounting. And some of these hard-won lessons have now got to be propagated into the wider sort of financial system, as everyone else has to kind of translate physics into finance. But that's not enough. You've got to do that final piece of the jigsaw of take those core metrics and then do the final translation to make it material, make it relevant, not to an insurance company, which has its own needs, but yes, to a real asset investor or to someone, operating big infrastructure like Microsoft is in the massive investments you're having to make. So the real challenge is allowing that level of common standardization. If I can put it like this, we need the Microsoft Word or the Microsoft Excel of physical climate risk. So we can all communicate amongst us all now, because we all use, though I remember, I'm old enough to remember that when there were lots of word processing packages, and there were lots of spreadsheets, and there were lots of browsers, and even there were lots of video, the video communication, as COVID came. And I'm not saying there should just be one, but it does help if there's one standard which then people can use and compete around. And that's what we need in this area of physical climate risk. And once you've got that, we can actually talk. We can properly integrate and communicate markets and customers and clients and data critically. So the other requirement is that, as well as having common standards, we've got some base data that is, as much as we can know, consistent around the world around climate and extreme weather, consistent standards of how buildings and other sort of assets are recorded, so that actually we can quite rapidly help people assess their risk, help them manage it themselves, but then appropriately finance and manage it. And it's taken a little bit of a time, a wee while, as I might say back home, for this sort of penny to drop. But I think now that the right institutions, not least Microsoft and ourselves in the insurance world, but a broader community of others, have decided that it's time to do this properly, to sort of cook from scratch in the kitchen. Not just try and take something that already exists, but actually cook from scratch, work out what the real problem is, what the real needs are, get that sort of perfect meal, perfect menu created. And then, of course, once you've done that, you then can sort of massify it into a much broader environment. So, that's what it's all about.
Yeah, and look, the idea of understanding and defining the problem, and then determining ideas to actually approach the problem, get into rapid prototype developing, testing fast, and then getting to scale is the way you've defined how you want to bring this ecosystem together to actually think about the problem. And technology we view as clearly being an enabler to that, of course. So we're excited to partner with you on that. And we want to bring the core ways to actually allow for the community to connect, the community to share information, the community to actually bring data sets together and risk analytic capabilities together, so the information can be shared in a common way and protected, and then bring generative AI and analytics and the compute power needed to get to the answers to actually do the prototyping, so that you can then get into the investment analytics and then actually the return models that are needed to actually support decisions. So we love the idea of coming together to do that with you, Rowan. So let's move into what we talked about on Monday, what we talked about announcing in terms of the Resilience Laboratory, and kind of talk about the vision behind that you've been helping to drive and bring the community together to think about it, and what it means with the discussion of the launch on Monday. Sure,
absolutely. Well, it's funny, you just said, technology and Microsoft are the great enabler. That's the platform of the key substrate that we need, technology, data, scale. And funnily enough, the report you mentioned that we produced around insurance and climate was, insurance as the great enabler. So it's great. There are two enablers coming together to enable everyone else to do what they need to do. And that's really the at the heart of it. And the Resilience Lab is based on the understanding that you can call the climate challenge whatever verbal sort of foliage you want. You can call it sustainability, you can call it ESG, you can call it resilience. There's all sorts of very sort of attractive words that come in or out of fashion. But ultimately, this is about risk. This is about communities and economies, investors, individually and collectively deciding what it is they value. They value maybe the value of their assets. They value the sustainment of their income streams. They value mutual security within a community. There's all sorts of things people will value, and then they have to come together to manage the risk to that asset, to whatever it is they consider to be valuable. And that's really important. So people sometimes say to me, "Oh, Rowan, you're always talking about risk. How negative." It's not. Risk forces you to define what it is you want to protect, what it is that really matters. And climate is a challenge because it puts at risk things we really find valuable. Our economies, our homes, are the security of our families, communities, the security of the natural environment, both for itself but also for our dependency on it. So, and at the heart of the Resilience Laboratory is a recognition that we haven't been so good so far in the climate sort of agenda because we haven't successfully identified the data and the analytics that needs to come together to help people truly understand how climate will put at risk what they value, and to allow them to understand very materially where that risk is, how it's building up, and how they can manage that appropriately. And the capabilities and the expertise does exist. There are the cooks who can be brought together in the kitchen. There are the utensils that exist, but they haven't all been brought together in the right way. So we want to have the confidence ourselves at Howden with our partners, our confidence with you to say, we don't mind actually taking a wee bit of time to get this right. And to actually build the right thing. And there's a variety of challenges that we can see in climate. But the first one we wanted to really address was this one of getting physical climate risk properly into the world of finance, because it's just without that, we really can't make the structural changes we want. So we started and we've done some great work. We in this area we've adopted a great methodology which was built over 3 or 4 years by a big group of investors who created the methodology, but they hadn't actually created the implementation of that methodology. It's called the Physical Climate Risk Assessment Methodology. And we've pioneered that, and we showed some great demonstrations of how basically investors and operators of wind farms in the US, in Oklahoma and in other geographies, what hazards they should really be concerned about. And actually didn't turn out to be tornadoes specifically. It was actually incidents of lightning was very important for wind farms in certain parts of the US. In other parts of the US, there's actually a predicted decrease in the actual levels of average wind speed, which would have potential bearings on the revenue security of some of these investments, but also would affect how certain wind farms may well be sort of updated and replaced by different sorts of technology, which may be able to cope with that more easily. And these were the sort of nitty gritty issues that this analysis was able to sort of support. But there are other things we're doing, which we'll be applying with the lab. So we're looking at how to ensure the long-term storage of carbon underground in CCS sort of projects. So I was at a big carbon capture and storage project meeting or community meeting here in New York last night. And I'm sure you're thinking about CCS in the context of the massive investments you're having to make in data centers. Sure, you're thinking very carefully about much of the low carbon energy that will be needed for that. But nevertheless, there may well be situations where the opportunity to capture carbon from related systems and sequestrate that is an important option to consider. But actually, some of the investors in that technology were concerned, well, if we can't ensure that the carbon will be sequestrated for ultimately decades, if we can't ensure that and be sure about it, and that our credits or tax breaks will be valid, well, maybe we're not entirely sure about this sequestration technology, and we've pioneered some work to actually enable that to be insured using the environmental liability market. But it's also going to be very dependent on lots of data and analytics about the technology, but also actually about geology and the natural environment. Similarly, we're developing insurance products to ensure the validity of carbon credits from natural carbon market sort of opportunities. So ensuring that and we've got an example in West Africa, a UK company bought carbon credits from a large wild forest sort of carbon credit sort of facility, but they wanted to ensure that those credits would be valid. That forest could burn down. There could be some political changes in a country which mean that actually maybe that area is no longer secure, all sorts of risks. And we were enabled the organization in Ghana to sell these credits with an insurance policy, so that actually, if there was some challenge in 10 years' time, then actually the buyer of the credits, which happened to be a UK logistics company, could go out and buy some others. And that made the value of the credits even higher. So how we use data to take out particular risks and make things much more attractive or secure as investments is at the heart of this. But ultimately, we need consistent global systems of data and information to allow us to sort of compare apples with apples. And that's why the planetary computer, upon which we based so much of the work we've done so far on the built environment with you, Bill, is so important.
Yeah, and I want to touch on that a bit too, because at the heart of this is many data sources coming together with a standardized view of that data, so you can do analytics on top of it. And yes, we're going to bring the planetary computer and that data set involved in this, but there's other data sets, and this is meant to actually attract investors and other insurers, right? This is to bring a collective thinking together.
Yes.
So there's a bit of trust in there, Rowan, as well, right? Around how do we fundamentally create an environment where data can be shared and data can be shared but still owned and protected to actually bring the value of the data sets together so that then everybody can use it in their own way to create value. And so we certainly want to address those problems, but I want to have you emphasize and stress this lab is to attract everyone to share in thinking. It's not just a Howden.
Exactly. We were very lucky. We had 200 people there, didn't we, Bill? And it was an invitation actually to help us address some of we've got a list of problems we want to address, but I'm sure there's some other good ones to consider or to link in with. But absolutely, I think those people who know enough about this space and are confident in this space know that actually there's no way that one can do it on one's own, but one can help orchestrate the solution. And the opportunities and needs are so great that actually, sharing this challenge with others is actually going to allow us to go a long way and in a bigger way. So absolutely, this is open, and we'll be, inviting our colleagues in the insurance and reinsurance sector as well as the wider finance world to this agenda, because ultimately, unless we're all to some degree able to communicate in the same way, we can't make a market work. All good. So please, listeners and viewers, go online and have a look, and if it's of interest, get in contact with Bill's team or my team, and we'll rope you in. All volunteers gratefully accepted.
No, thanks for that call to action. And in closing, Rowan, one, thank you for joining me, but let's go back to the theme of it's time. Any final advice for those listening around the time we're in and the need and the emphasis to actually move now, right? Time is of the essence. So any last thoughts?
I've got one last thought. So, as we all know, we are in an emergency. We do need to move forward, but I think this has got to be an agenda that captures people's sort of hearts and minds and imaginations as much as their sort of their rational side. And go back to history. We talked about urban fires. If you go back a wee bit earlier into the early 19th century, there was a concern as Britain and America were industrializing, we were losing our connection to the environment and to nature, and it created this sort of movement in art and literature called the Romantic period of literature with a capital R, and it was sort of famous by poets like Wordsworth who tried to reconnect people to nature through the emotional impact of poetry and all the rest of it. And maybe it didn't really work because we kind of carried on as we were. Then we had a romantic period of music in the early 1980s, which, some of us enjoyed more than others, but I quite liked it. But some of us are saying, you know what? We need a romantic period of finance where we connect ourselves to nature through the power of getting the environment properly into finance and credit ratings and all these things, but actually also through that begin to create the right sort of emotional connection with how important nature is to us and how important we are to it. And so, I suppose in a way, if we can be seen as creating the tools for that sort of reconnection, an appropriate reconnection with the environment upon which we all depend, well, maybe we're onto something really big, and maybe we can do some beautiful technical poetry together and financial poetry in the months and years ahead.
No, I love it. Thanks for the history and the connection and making this real and making the emotional connection to actually driving passion in this. You certainly have it for me. You generated it on Monday in our discussion, certainly generated a lot of excitement. So I look forward to working with you going forward. Rowan, thanks for your time. Thanks for spending a few extra hours in New York City with me on your stay, and look forward to doing great things with you.
Super, Bill. Thank you so much.
And thanks to all of you out there for tuning in to my second episode of the Borden Line. I look forward to my next conversations in the series and hope you'll come back and join me. Please keep the texts and messages coming in for topics that you want me to cover in future sessions. Thanks again, everyone.